This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, May 18th, 2016. Euro dollar. So the euro has come back under some more pressure in recent trade, with the market now gravitating back towards critical support at 112.17 in the form of that low that we saw back on the 25th of April. If the market can break and close below 112.17, this will shift the focus back to the downside and open acceleration of declines. If however, the market is unable to establish a daily close below 112.17, it will keep the more immediate pressure on the top side and leave the door open for the possibility of another topside test of that recent 2016 high at 116.17, which guards against the more critical medium-term resistance at 117.10 further up. Sterling dollar. So cable has pulled back in recent trade after failing above some key resistance at 146.70, and that topside failure does leave the pressure on the downside for the time being, with the market potentially exposed to deeper setbacks in the sessions ahead. Look out for key support from this week at 143.33 with a break below there to accelerate declines. But if the market can establish back above that recent high that we saw at 147.70, going back to that 3rd of May high, it would open the door for additional upside and suggest that there's a more significant base establishing at present. Dollar yen. Dollar yen is overall locked within a broader downtrend, and the market now is looking for that next lower top ahead of the next downside extension back towards those recent lows at 105.55 and below. At this point, it would take a break back above 111.89 to negate this downtrend and open the door for additional upside. Euro Swiss. So Euro Swiss continues to be highly constructive, with the market very well supported on dips and now focused on a next topside test through 111.10 to open a retest of that critical multi-month high at 112 further up. That's the high going back to the 4th of February of 2016. At this point, look for any setbacks to be very well supported, with only a break back below 108 to really compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie continues to be pressured to the downside after recently breaking down below the 200-day moving average, and the market could be poised for additional weakness over the coming sessions, exposing psychological barriers at 70. At this point, any rally should be very well capped, with only a break back above 76 to really threaten this current renewed downside pressure. Dollar CAD. So dollar CAD is showing signs of a more material base after basing out by those 2016 lows just under 125 several days back. If we do see a break of this consolidation over the past several days and a push back above 130.16, it will strengthen this outlook and open an acceleration back towards next key resistance at 132.19 further up. Any setback should ideally be very well supported now ahead of 127. Kiwi dollar. So Kiwi ultimately remains pressure to the downside, with any rallies being very well capped, and the focus now is on a retest and break of recent support at 67.16, which will expose deeper setbacks towards 65.46 further down. 65.46 is that low from the 16th of February. At this point, any rally should be very well capped ahead of 69. SPX 500. So the S&P 500 continues to show signs of stalling out yet again above 2100, with the market now carving what looks to be a head and shoulders top on the daily chart. Look for a break below 2021 to strengthen this outlook and accelerate declines, opening a measured move objective initially down towards the 1930 area, but more importantly, if we get down there, the market will start to focus on a potential retest of that 2016 base at 1808 further down. Gold. So gold has seen a bit of a setback in recent trade after stalling out just shy of the 2015 peak at 1307, but overall the market remains highly constructive now, with any dip seen very well supported down towards 1200 in favor of the next upside extension beyond 1307 and towards 1400 further up. Only back below 1190 would compromise this constructive outlook for gold.